and nobody seems to be on the run. Oh, there is fire on the mountain top, and no one is around. I wake up in the morning, tell you what I see on my TV screen.
Let's get started.
I see the blood of an innocent child, and everybody's watching. Now I'm looking out my window, and what do I see?
Good evening, everyone, and welcome to Crypto Pulse Weekly once again. Happy to have you. Tonight, we're talking about the looming banking crisis and what I would term hyperinflation and the possible effects on Bitcoin. I also have a secret giveaway at the end of today's session. I have a secret giveaway, so please remind me that I have a secret giveaway. It's an information I need to pass across that I think is very vital to people who are serious about about financial independence and security, especially in this age of bank run. So, to start with, I want to talk about what's been going on. In case you are not aware, there is a banking crisis, and when I started playing that song by Asha, "Fire on the Mountain," and I was looking at the information, I saw that it was actually released in 2007, and it was funny and quite poignant because 2007 was when the Lehman Brothers crisis started, and everyone was like, "Nah, Lehman Brothers cannot fail. It's a big bank." At that point in 2007, I remember very vividly because I just started working as an IT consultant around that time. So I remember very vividly that there was not so much talk about the crisis, even though it did start in 2007. Then it became worse in 2008 when people started making runs on the banks, and then it became full blown by the end of 2008 from 2009. And in the same vein, we seem to have something similar right now. So for people that may be watching this for the first time, or people watching this on YouTube or Instagram for the first time, we have a situation where we could easily, very easily get into a banking crisis this year. And what do I mean? The last financial crisis that happened in 2008 was because the bank had over leveraged themselves. What does that mean? The bank had borrowed much more money that they could afford to borrow, way beyond what they could afford to borrow, really. And because of that, the bank got burnt. Or Lehman, and people like Lehman Brothers were shut down. I mean, that was a hundred and something year old company, got killed because they overstretched themselves. In the same vein, we have something similar now. And the way they overstretched themselves then, the 2008 financial crisis was called the subprime mortgage crisis. What was happening then was because the bank got greedy and they felt like they weren't making enough money, they started lending money. They found a way to start lending money to people who couldn't afford to pay it back. And what they were doing was, if I was a plumber, I was making $40,000 or $50,000 per annum, they would sell me a house with little or no down payment for, let's say, $1 million, knowing fully well that I would never be able to pay back the house. Now, what then happens was they started offering people interest only on their own houses. So people are paying interest only on their own houses, or well, it wasn't their own houses, on the houses they bought, which they couldn't afford. And as the rate of proliferation, that's proliferation. Sorry, as the rate of proliferation increased for such mortgages, the bank started to get more and more exposed because it meant that more debt was accumulating on the bank's balance sheet. Now, I don't know who came up with that idea, but some smart dudes decided that they were going to package that debt and going to productize or commoditize it, just the way governments package their debt and commoditize it as bonds or treasury bills. So they said they are going to package that debt. So they packaged the debt, took it to Wall Street, and started selling it in other countries, not only in the United States. They sold it all over the world essentially. Until somebody was like, ah, this thing we are buying, what is it? And they started poking at it, and that was when the problem started because all of a sudden people realized that those special package financial instruments that they were buying or investment instruments that they were buying were toxic debts of people's mortgages that have been packaged by the banks. Now, that was the genesis of the financial crisis in 2008. And of course, many people lost their homes. Of course, many people lost their jobs. Many people lost their livelihood because of that financial crisis. But in the end, the banks were the ones that gained the most. The ones that survived were the ones that gained the most because what then happened was they got a bailout from the government. They used that bailout to clean up their assets or their liabilities, sorry, and establish themselves back. So they wiped the slate clean essentially for them. And it is important to note that that bailout was what generated the onset of the creation of Bitcoin. In the original code, in the original, the what you call the Genesis code of Bitcoin, one of the notes that was quoted there was the news, I think was the Daily Mail of the morning of 2009, January or something like that. And it quoted that Bank of England to bail out, the banks. And that was a thesis, really, that was a thesis upon which Bitcoin was created. And it's very simple. And I've explained this many, many times, but I'll say it again just for the benefit of people who are hearing it for the first time. If you bought a bottle of Coca Cola, everybody in the world knows Coca Cola. If you bought a bottle of Coca Cola and put it in a bottle and you start drinking it, let's say one common in Nigeria, I think it's the 50 cl or 35 cl. Yeah, 50 cl. The 50 cl is also the one in the PET bottle, the plastic bottle. So let's say you got a 50 cl bottle of Coke, you drank half of it, then somebody decided to play a prank on you and poured water to fill it back up. Immediately you lift up that bottle of Coke, you notice that there is a drastic change in the color and the density of that bottle of Coke because you have a 50% dilution. If for whatever reason you don't know and you drank another half and somebody comes again and pours another half into that same bottle of Coke, what then happens is that bottle of Coke begins to look like a bottle of iced tea because there is now severe dilution. Monetary policy as we know it in the current world is the government's instrument of control to be able to manage the people and manage the economy. Now, I don't want to go into the origins of economy, but economics is the study of scarcity. So the current monetary policy and central banking system that we have today was brought about in the early 1900s, and the whole essence of it is to be able to generate a model of control. And as a matter of fact, going back or down the history lane, when the bill to pass the creation of central bank was in the U.S. Senate, there were a lot of people that opposed it. But it's very interesting to know that all the people that opposed that bill died mysteriously. I don't want to go into the history of it, and I don't want to go into conspiracy theory. But all the people that opposed the bill of creating central banks and currency and monetary policy, every single one of those lawmakers in the United States died mysteriously, and then there was no opposition, and the bill was passed. So, I mean, I don't want to go into the reasons of why and what, but what is clear is that the current central banking system is designed to impoverish the people largely. Largely, that's what it is. Because after the central banking system was created, I mean, there were world wars and all that. After that time was when the gold standard was shifted. And what was happening then was a dollar was pegged to an ounce of gold originally. So it meant that the United States, to be the banker of the world, needed to validate each dollar they print with an ounce of gold. Now, when the United States President Nixon came on, and there was a lot of shady things that happened during Nixon's tenure, by the way. But one of the shady things they did was to unpeg the US dollar from the gold standard, essentially saying that they did not need to back the printing of US dollars with gold bullion in their reserves. What that meant from that day was that the world economy was being run on currency as opposed to gold. And since that time, the economy of the world has been debt based as opposed to gold backed. I don't want to go too much into history, but I have to give you that background so that you understand why we are where we are today. There will, in many economies, I mean that's not just in the UK, even in Nigeria, you hear things like, "Oh, when I was growing up, this thing used to cost $1, or this thing used to cost cents. Now it's in tens of dollars. When I was growing up, this used to call, it was in peas, but now it's in tens of pounds." And it's not peculiar to any geography because the world is operating largely on central banking. So what is happening is as the central banks produces more money, it dilutes the one in circulation, just like the example of Coke I gave earlier on. As it dilutes the one in circulation, it means the value of the money everybody is holding drops by the percentage of dilution. I'm going to take that again. The value of monetary wealth or cash that everybody is holding is diluted by the amount of input or additional currency that have been added into circulation. Now, to mitigate the effect of this, what usually happens is you're not, if you're not like Zimbabwe, where they overdid it, it will not become obvious. So, to mitigate the effect of that, the economists came up with a formula. Well, not with a formula, but a methodology. And the methodology was that if you are going to pump money into the economy, you use debt to pump money into the economy, in which case somebody needs to want to borrow money. So when somebody needs to borrow money, the bank will get authority from the central bank to create money for the person to borrow. When the person borrows the money, if the person is using it for construction or for whatever they're doing, or for a business that's going to generate income, as the person generates the income and pays back the money, the government, in a way, as quote unquote, created value out of thin air. However, to take care of the problem of hyperinflation, what the government does is it sells bonds, it sells treasury bills, and as the government sells those bonds and treasury bills, they will give you a percentage increase or a percentage return on your bonds and treasury bill. What that does is you are basically buying back the debts that the government created. So you are investing in the government's debts. So that is the cycle that central bankers and economists have created for today's society. Am I for it or against it? No, I'm just explaining it as an objective observer. But the problem is when you have a situation like you have in 2020, 2021 with COVID, and then they just went crazy with money printing, there is bound to be repercussion, and the repercussion is inflation. Now, inflation is toxic because it means the price of everything goes up. And the reason is, if you remember basic economics when it talks about factors of production, when it says land, labor, and capital, those are inputs to factors of production. Now, if you have a sudden pump in either of the metrics, and there is no concomitant result on the other side, what it means is there's bound to be a reaction. So what happened was there was no land and there was no additional labor, but there was increase in capital as a result of COVID. That capital has to find its level. It's like a flood. It will eventually have to find its level. Now, for it to find its level, it results in inflation, because then all of a sudden everybody has money, and then the value of things go down. I mean, it becomes more expensive rather, because the value of money has gone down. So everything becomes more expensive, and everybody begins to struggle. To tackle that problem, central bankers now start increasing interest rates, meaning they make it more difficult to create debts, and they make the already created debts more difficult to repay. I explained this last week. If a company borrowed $100 and they had $100 in their pocket, they're paying, let's say, 2%. So they're paying $2 as interest. They borrowed it after the first year. They made $200 in profit. So they have $300. 200 of it was debt equity. So they are still paying interest. They decide that, okay, we are going to roll over. We're going to continue to pay interest. They put in the money again. Another successful year, they generate. Let's say this time they generate 600. Now they have $1,000 as cash position for the company. They're still paying $2 as interest, right? But let's say they decide to start paying after the second year. Now that they have 1,000, decide to start paying some of the capital back. Let's say they paid 50%, or let's say they paid 10%. So they still have 180 to pay. And now, because they have a lot of cash, they decide to go to a bigger project. They've engaged with the project. Let's say they now borrowed 1,000 on top of the 200 they had before. So now their overall position is 1,200, and they've only paid back $20. Then inflation starts to hit. Then interest rates start to go up. Now interest rates now goes up from 2 to 10%. What that means is that interest rates are done in 5x against their original position. Now, if their projections do not come true on their new venture, or they don't break even. Let's even assume that they break even. If they break even on the new venture, meaning they don't lose any money and they don't get any money, what it means is that the cost of capital has gone up. And because the cost of capital has gone up, it makes their business more difficult to run, because then they can't take loan like they would have been able to before. The one they have, they'll be spending a lot of money servicing that loan. If they've done that in many places or across many asset classes, then they become exposed. So what is happening with many of the banks that I was explaining last week is many of the banks were okay at next to zero interest rate, or at 1%. Many of the banks were okay, because what it meant was that they didn't have too much exposure. The people they borrowed money are still able to pay. The businesses they borrowed money are still able to pay. But now that interest rate has gone up and the Fed is still not stopping, they're still winding the interest rates up. What it means is that it becomes difficult for businesses to catch up and keep up with their financial responsibilities. As a result, they have to, raise their hands up and say, we're filing for Chapter 11. So as it's happening in companies, it's happening in banks. It's happening in banks more, because banks are the ones that are exposed to debt indirectly through their customers. So that's what's happened for Silvergate. That's what happened for SVB. It happened for Credit Suisse. Credit Suisse, got into trouble. Now I'm hearing that Deutsche Bank is towing the same line as well. And I was watching a CNBC clip just about 2 hours ago, when the guy was saying, he was arguing for Deutsche Bank and saying, Deutsche Bank is a profitable company. They're not like, Credit Suisse. The problem is they're in trouble. And when Silicon Valley Bank had issues and was going down, there was a report that said 250 other banks in the United States were in worse off conditions. What does all this mean? It just means that the interest rate hike is hurting the banks, because it means that their customers are having a difficult time paying back their loans. And as a result of that, the banks have exceeded their threshold of leverage. Let me use that word. So in banking, in banking regulation, there's something called the Basel framework. So this Basel framework, they named it after Basel in Switzerland because that was when they first, drew up that framework. There's Basel 1, 2, and 3, and I think there's a 4. And the whole essence of this Basel framework is to ensure that banks do not get into trouble, but they keep getting into trouble anyway. So one of them is to say that a bank should be able to withstand a stress test, meaning if there's a bank run against the bank should be able to withstand the test. If if there is an exposure, it should have enough buffer to be able to cater to that exposure. But apparently, it never happens. So now, Silicon Valley Bank has been bought in the UK, has been bought by HSBC. In the US, probably acquired by what's it called, Goldman Sachs or one of these other banks or Chase. I can't remember which one of them. But the problem is, this is just the big. I think this is just the beginning. And why is it just the beginning? Other banks that have similar issues, as the interest rate hike continues to go up, it's like you are. It's like consider somebody. I mean, this is a very extreme example. Consider somebody sitting down, and then a car comes, and the tire of a car, a small car, the tire of a small car rests on their leg. Let's say they were sitting down and they weren't paying attention, or they were looking at something else. Or let's say something heavy rests on their toes. No, initially they're not going to feel it because they were not looking in that direction. But after a while, the pressure cells or the pressure nerves in the toes will send a signal to the brain that there is trouble here, and the person will look down like, oh, this is what is going on. Now the person might be able to bear a touch. So let's say somebody stepped on your leg now, or stepped on your toes, and then removed their leg. Yeah, you might be able to bear that. But if somebody stepped on your toes and stood on it and continued to stay on it, then it becomes a problem. Just the same way, if you're holding out a cup of water and you're holding it for 1 minute, you can probably hold it for 4 or 5 minutes. But by the time you've held it for 20 minutes, your whole upper arm is completely sore because it's taking more time and your muscles have become fatigued. So what is happening now, I think, is debt fatigue that's happening to the banks, and I don't think we have seen the end of it yet. So why have I told you all these stories? I've told you all these stories because it is going to reflect very soon in the price of Bitcoin. And I've been sharing my screen since I started. The reason I was sharing my screen was I talked about this last week, that we have a very um, what I'll call a very bullish price action in the price of Bitcoin the last week. Now, what that price action means in simple terms is that it's moon time in crypto speak, meaning prices are about to go up. And the reason I said that was the bullish candle of the week of the 13th literally enveloped 3 weeks downside before it. And I was saying then that I was watching out for 33,000. And if you remember, then I marked this area out as resistance area, this purple area. And the reason I marked it out was we've had a number of supports there before, right from January of 2021 to June of 2021, and then to May of 2022. So I sort of felt that yes, we should expect some resistance when the price gets here, and it's played out already. The price didn't even touch 30K before it dropped down. However, however, it is still very much the upward trend that I see here is still very, very much in play. And this is the weekly chart. So, like I said, weekly chart is a long-term chart. It does not tell lies. Let me use that word. It is the truth. If there's anything like that. When you're looking at price action, longer term frames do not tell lies. They tell you the way the market is. So right now, the market is on a pick up level, really. And until the end of next week, I'm not going to call this as a pullback yet. And the reason I say so is because If the week closes right now below 28K, this week will be like an indecision week. And it's understandable because this was the week when there was the Federal Reserve Bank meeting. There was a lot of things that happened this week. So that indecision is excusable. And because we're close to the resistance at 30K, that is also excusable. But bear in mind that once this week pass and there are talks of injecting another $2 trillion to bail out the banks, this one is specifically to bail out the banks. It's not free money for everybody like the one that happened in 2021 and 2022 and 2020. It's specifically for the banks. If that is going ahead, what it then means, just in simple terms, is there is free money. So at the one end, they are tightening the interest rates. At the other end, they are pouring in more money. It seems what's the word, counterintuitive and actually stupid. But if you understand the optics, you understand why they're doing what they're doing. They can't allow any of the banks or major banks to go down right now because it can trigger a run on all the banks and then there'll be major financial crisis, which no politician wants or no central banker wants. So to prevent that, as the banks are showing up with issues, the federal banks will give money to the bigger banks to buy them up, just like what I explained last week. They buy them up so that there is no problem. If you want to collect your money, they give you your money. But they buy them up so that there is no crisis. As they buy them up with the money that the Feds have provided, they give a sense of stability, but they leave the interest rate where it is. So as more banks are failing, they are mopping them up, and providing funds to support the big banks. What is going to happen then is there is a possible scenario of what you call hyperinflation. And I don't want to go into details of hyperinflation. It's not a nice topic. It's a nasty scenario. But if we do get into hyperinflation, then very, very, very quickly, Bitcoin price will become really unbearable. And that's why I said, I think tonight's session is really very, very, very important. So please, if you've been listening to me before, listen very, very well tonight. It's very, very important. Very, very important. One, if the Feds go ahead with the capital injection, then there's suddenly free money for the banks. That free money will have to find a place in the markets. Usually, when it goes to the banks, it will show up in the equities markets because all of a sudden, the bank will start talking to their friends, the hedge fund managers and the big fund managers, to say, okay, we have free cash. What do we do? So they'll bring it, let's pump it into stock markets. So the stock markets will start going crazy. If the stock market start going crazy, the price of Bitcoin will start going up very rapidly. Two, there was a summit between China and Russia sometimes this week. And China was making statements like almost like the new era is around the corners. I'm paraphrasing. But what they're saying is that they are going to come up with a way to sidestep the US dollar as the currency for world transaction and create their own economic system to trade with each other. So that's what is brewing on the side. Then there is a major news. So this was what I was going to say at the end of today, but I'm going to say it now because it has correlation with the price of Bitcoin. There is a major news out of China. Hong Kong now belongs to China fully. There is no British interference of any sort. There is a ban that will be lifted in Hong Kong that allows people to buy Bitcoin in Hong Kong. That ban, that ban lifting is going to come into place in the first week of June. Why am I saying this now? Because it's now public information. June is just 3 months away. There is a good saying in the market that buy the rumor, sell the news. The news is going to happen when it happens in June, but the rumor has come out already. Every major player and every market maker will want to front run that news naturally. So come June, if that's the case, because people are already wary, by the way, people are already wary in China of the strength of their currency. So people prefer to buy gold in China than to hold Chinese yuan. So you have long queues on gold ATM, long queues on banks that exchange currency for gold. But they can't. Gold is not banned in China because yes, they recognize it as a precious metal. But they banned Bitcoin because they found out people started making the same moves toward Bitcoin, and they were trying to introduce their own central bank digital currency. That was around 2020, 2019, 2020. They did release it just in, I think, in May 2020, but I don't think it's been seriously successful. They were the first to come up with the CBDC, the central bank digital currency. In fact, they were incentivizing the citizens by saying that if you were willing to get paid into your wallet, they were going to give them, I think, a $20 or something, or yeah, $20 or $50 airdrop. In China, that is a lot of money. Airdrop meaning free money. They were going to give them free money for using the whatever. But I don't think it caught on so much because people want money. Let me put it this way: the people in China, many people in China, want money that the government cannot dip their hands on or put their hands on. So that's the appeal in China for Bitcoin, and Bitcoin is banned in China, but I mean, it's been banned so many times. So if for whatever reason that news come to pass in June, we're going to have a mini bull run. Now, it doesn't mean that the price will go up in June. It probably means that the price will have gone up before June and crash in June. But the price is not going to come down because people will keep buying after the crash. People will keep buying, and it will increase the rapid rate of adoption. So we will have a mini bull run in the bear market, literally, if that happens. So the rumor is out now that come June, that ban will be lifted and people can buy Bitcoin over the counter, they can buy Ethereum and all that stuff. If you put that against the hyperinflation scenario that is playing out, then you know that there is a potential for some significant price gains in the price of Bitcoin this year. So, what are my thesis? I think that if next week closes and Bitcoin is able to stay above 30K, then there's a good chance, there's a very good chance that Bitcoin, before any major correction, will likely hit the 40s range. However, if it doesn't and it begins to crash down, then I think we're going to visit the 16 to 19,000 level once more before the end of this bull run. But I'm almost too sure that that visit will be probably the last visit for a long time to come in below 20K. It probably will never happen again. I'm not predicting, I'm just just based on the possibilities because now we have a potential financial crisis or a mini financial crisis with the banks going on. Many people that bought Bitcoin understand that Bitcoin came about as a result of the recklessness of the banking institutions and the bankers. And as a result, people want to preserve their wealth. So, what is the major message that I'm trying to pass across? Don't keep your money in the bank. Get a Bitcoin decentralized wallet and buy Bitcoin. If you want to buy real estate, buy Bitcoin. It's not a financial advice, but I'll explain my logic to you. If you have 100K, just in any currency, by the way, whether it's naira, dollar, or pounds, if you have 100K and say, okay, I want to use it to buy land, I want to use it to buy property, and you bought that property, I don't think you can get 100K property in the major cities in Lagos. But let's say it was $100,000 just for illustration purpose, and you bought that property. You have running costs on the property. You pay council in the UK. You pay council tax. You pay insurance. If there's any damage, you pay. If you have renters, fair enough, you get about net maybe like 5 to 6% annually on your on the rents. If you do Airbnb and you have very good turnout, you may probably be able to make 10%. Depending on where your property is, using UK as an example, London properties are set to double every 7 to 8 years. Outside the UK is about 10 to 15 years before the value doubles. So it means your 100k, let's even use London. I mean, London is pretty very expensive. If your 100k will become 200k by what's by 2030. However, if you bought a 100k Bitcoin today at $27,000, let's say you bought a 100k pounds, that would probably be like 4 Bitcoins. By the end of next year, your Bitcoin will be worth each of your Bitcoin will be worth somewhere between 70 and 100k conservatively, just next year. Now, if we say you want to stretch it for the same period of time, what it means is that you will have another bull cycle after this coming one, meaning you could have your 25k or 25,000 pounds Bitcoin of today very easily sitting at around 250,000 pounds. That's a 10x in the 7 year period. Of which, if you want to sell your Bitcoin, you can just plug it to any exchange and sell it at any point in time. But that's not the same with real estate. That's not the same with a land. You need to get a willing buyer, and it takes a while. So understand that Bitcoin is sovereign wealth created by technology. Um, like I always say, it's the first time human beings have been able to bundle wealth into a confines beyond time and space and make it transmissible, almost in violation of the laws of physics. Because if you had $100,000 in cash today, let me play upon your imagination a little bit. $100,000, because the largest denomination in US is $100. So you have 10,000 in each bundle, in each small bundle of of a US dollar. So let's say it's $100 notes. You have one bundle is 10,000. So sorry, what am I saying? One bundle is 100 times 100. Yes, that's 10,000. So $100 is 10 bundles. 100,000 is 10 bundles. If you have a million, you have 100 bundles of US dollar. Now, to carry $1 million anywhere in the world, at least you will spend 2.5 to 5% in logistic costs to move it around. That's a fact. And as a matter of fact, you can't carry $100 across anywhere. Immigration will stop you and ask you, what are you doing with $100,000 in cash? Um, and you can't say, I want to give you $100 now and say, expect to get it tomorrow. Even if you send it by bank wire, it will probably take 24 to 48 hours, working days on the middle of the week for $100,000 to move across time and space. If you have $5 billion in Bitcoin, it will take 30 minutes to move it from Sydney, Australia to Ontario in Canada. That's almost around the globe. But let's say you took if you took the long way around, that's almost 2 days journey by plane. It will take 30 minutes max before the value is reflected with the recipients, because we have managed to create a technology that allows us to port value across time and space. And I'm very passionate about these things, because, and I say it all the time, that we're not conscious of it because it's happening in our day and it's happening before our very eyes, and it's almost like it's happening in slow motion. So we don't appreciate it and you don't see the value of it. In years to come, 10, 20, 50, 100 years to come, people will write about this year, look back about this time and like, man, That was a major invention because it is the democratization of capital, and it changes everything. Just like the democratization of knowledge gave birth to every single advancement we have today, it's going to change a lot of things on the surface of the earth. So my plea to everybody is, please, as much as possible, especially, I mean, keep your money out of the bank. For instance, let me just put it this way. In the United Kingdom, no matter how much money in the bank that you have, the only coverage that the government gives to safeguard your money is 80K. I think it's not even 70K. Anything above 80K, the government is not responsible. So if the bank closes down, your money is gone. The only thing you get back is 70K. Regardless of whether you have 500,000, 800,000, 1 million, 10 million, 70K. So that is one of the reasons why central bankers are not happy with Bitcoin, because it makes complete rubbish of the whole central banking system. And it's not going to change. They're going to continue to print money. They're going to continue to, dilute the value of the currencies. It's not going to change. And I think as individuals, and as, I mean, I'm a parent and I think about my children, like, there's no better legacy to leave than to leave a legacy of incorruptible value. If you buy land, I mean, just like if you bought land in central London and there was war, but the land still, is still your land, your title is on it, you're not going to sell that land because there is war and the prices are down. No, because it's a prime property, you're going to leave it. You're probably going to will it, to the next generation as a gift to allow them build on generational wealth. So in the same way, what Bitcoin has done is to provide that opportunity to use technology to preserve wealth. And my charge to everybody listening is that you need to take positions, especially now. You need to take positions. I think that's all I actually wanted to say today. In terms of my outlook for the price, I think, like I said, it's not looking strong right now on the weekly. And as a matter of fact, we have a bearish day today, Friday. But even though we have a bearish day, we're still looking like we're in an upward trajectory. So currently, I'm still convinced that the price is looking up. Even if I break it down, yeah, so if I break it down to, the 4-hour chart, which is that the intraday position for the price of Bitcoin, is still looking up. So what is happening? Let me put it this way: the market is testing the resistance. It's almost like when somebody is boxing. I don't know if you've seen that clip before. It's a clip of two boxers. One of them was just throwing punches at the other one. The guy was taking the punches with his head, but while taking the punches, the guy was stretching, and I can't remember if it was the left or the right. He was stretching forth one of his arms to measure the distance between him and his opponent. So once he got to the reach that, okay, this is where this guy was, immediately the guy swung like this. He just gave him a counter blow and he just knocked him out cold. So he was trying to gauge, where the guy was and to see how far he needed to reach to take the blow. And then he took the blow and took him out completely because he went straight into his temple and knocked the guy out. So when I see this kind of pattern, it tells me that the market is trying to see, what's up there, to see if there's any major sellers up there. So I've seen this now. The market is trying to 29,300. We didn't even get to 29,000 before. Before now, we were seated at 25. Then we tried 26. Then we went to 27. Then came down to 26. Then went again to 28. Then came down sharply to 26. Now it's gone to test 29. So it tells me that the market will try to make that ascending sinusoidal move, like I said last week, into the 30s. Liquidity is usually light during the weekend because bankers are not trading during the weekend. Even though I know some bankers trade, so bankers trade behind the walls on the weekend, but there is low liquidity on the weekend, so that can drive the price further into the 30s over the weekend, especially usually it's between Friday night and Saturday night. By Sunday, all those trades will have closed. So there's every possibility that the market will test 30K this weekend. it doesn't mean that we're going to stay at 30k. It just means that the market will have a feel for 30k. And if the resistance is not too high, then I expect that would definitely hit 31k. Based on what I can see here, definitely, we're going to touch 31,300. Definitely. We might touch 31,300 and the price just holds there and stays there for a while or drags down a bit in the coming week. But we're going to touch 31,300. Whether we're going to do that this weekend or during the coming week, I can't tell. But there's a lot of price action between 28,400 and 32,000. So definitely, I think 32,000 is the upper limit that I'm looking at for now. Yeah, 32,000. There's a question that can you tell us a list of tokens to buy apart from Ethereum and Bitcoin? I think I mentioned that about a week or two ago. I mentioned Solana. I mentioned Optimism. I think I mentioned Arbitrum. I mentioned AVAX. Um, I think Dogecoin. I don't like Dogecoin, by the way. Just a disclaimer. But I have a nudge in my mind, or I have this on a nudge, or like, and I feel it's like an intuition that there's going to be a price spike in the price of Dogecoin. I don't hold any Dogecoin, by the way, but it's almost like a repeated thought that's showing up in my mind, and I'm thinking, okay, maybe something is about to happen for Dogecoin. Um, Total disclaimer on Dogecoin. I don't believe in shit. It's not even shit coin. It's a meme coin. I don't believe in meme coins. But yeah, if you have some, $100 play money, you can buy Dogecoin. I think you might see some interesting moves in the months to come. But I'm very sure of Ethereum and I'm very sure of Bitcoin. Once that China Hong Kong play comes to limelight, it's going to be a blowout because that's that's like 20% of the world population, the people in China. So they have, even if you think they don't have significant buying power, they have the volume. And by the way, there are a lot of the largest number of billionaires in the world are in China. So it's a significant play. So yes, as I said, Solana, Avax, Optimism, Arbitrum. Um, I did mention the AI tokens. I've not finished my research on AI tokens. Try to separate the wheat from the chaff. There are a number of AI tokens that just, they are just AI tokens in the name. They're not really AI tokens like that. They're just so like they just have GPT or AI in their names. They're not AI tokens, but they are proper AI tokens that are doing the work. So I promise that hopefully next week is the last week. Yeah. Hopefully next week I will have finished. I'll be able to share my the products of my research on AI tokens. But I think AI tokens are going to be significant place in the coming go on. What else? Yeah, I think that's all I wanted to say. I don't know if there's any question apart from the one that Bam Bam has asked. If you have any question, you can type it or you can mute your mic and we can take it. Um, categories. Yeah. Let me see. Mhm. Can we bring a list of tokens next week so you can give us something? Okay, yeah. You can bring a list of tokens, Bam Bam. You can bring a list of tokens and then we can look at them together next week. One after the other, and I'll tell you my opinion just straight up by looking at them, and I'll tell you my opinion that okay, this is where this yeah, this is where this market cap has really gone crazy with their interesting. They've really gone crazy with that categorization. It's huge. Albert, do you have a question? The mic went off for a while.
Yes, yes, yes. Doc, good evening once again, and thank you again for a wonderful presentation this evening. Um, One thing that has been should I say, bothering my mind. I mean, the BNB chain platform. Sometimes I take projects that are listed on BNB chain platform has not serious projects like those ones that are built on a Ethereum network. That is my first observation. Then number two, though this one you've indirectly answered it, but let me ask again. If you look at the chart, do we have a chance of going the 16K of Bitcoin? Is it still in play or it's no more?
Okay. Bam Bam, you had a question.
No.
Oh, okay.
No, sorry. I'm ready. No, sorry.
Okay, so let me explain my analysis of the price action. So one of the first things I tend to look at is to look at where the price is relative to what I would call Fibonacci levels. Fibonacci levels are like mathematically derived levels of price action. So right now, I think it's going to hit this top band of the Fibonacci level because when it makes this kind of correction, if you have anything greater than greater than or equal to a 50% correction, then you expect that you're going to have an extension of another 50% at the minimum. So based on that, hi DJT vibe, I see you. Based on that, I expect that the minimum we're going to get to is 31,300 before any further dip downwards. And again, I'm saying that because I'm looking at the daily charts and I'm looking at the weekly chart. The weekly charts cannot lie. They can't. I mean, that's just the nature of the weekly chart. It just tells you the way the market is. The daily chart is a more detailed view of what's happening in the weekly chart. And what the daily chart tells me is that it looks like the price is going to head to 32K before any further downside. Now, will there be downside immediately after? I don't know. But from what I'm seeing, we're going to hit 32K on or before end of next week. At which point the price might correct itself back to the 16K region. But I don't think it's going to happen immediately. And the reason why I don't think it's going to happen immediately were the things I said earlier on at the beginning of the call. We're having too much turmoil in the macroeconomics. There is banking crisis, and there is talk of the federal banks pumping in money as stimulus for these banks to bail them out. And usually when you have a bailout, especially when you have a banking bailout, you usually have a spillover into the equities market. Because like I said, once the bank collects the money, they wipe off their liabilities. Then they immediately have spare cash. And when they have spare cash, the next guys they talk to are the guys in Wall Street and the hedge funds. And what do those ones do with the money? They pump it into the equities market. So if the equities market starts getting money, crypto is going to go crazy. So whilst there are macroeconomics headwinds that suggest that we can still go further down, I think we'll first go up to 32K before any further downward movements. And I think that in a scenario that looks like 2013, you might get to 32K and then just go all the way down to 15K, wipe out everybody, then start the journey upward till the end of next bull run. So I have those scenarios, and I explained them last week. I have those scenarios playing out in my mind that as possible option. But right now, I think, like I said last week, I think it's almost inevitable that we're going to see some gains. And once the price touches 30K, there's going to be a lot of noise. Oh, Bitcoin is back to 30K. Then it might take a nosedive again and come back to the sub 20 region, if only for a brief period. About your comment on the BNB chain, the reason it looks like BNB products or BNB chain tokens are not serious is because BNB chain is largely centralized. So it's very, very, very cheap to develop a product and to launch a product on BNB chain. Ethereum, however, is much more expensive. and it's much more difficult. Let me put it that way. Coding in BNB is a simplified form of coding on Ethereum. So it's easier to code on BNB than to code on Ethereum. It's costlier to code on Ethereum than on BNB. So naturally, if a product is going all the way to code on Ethereum, they are much more likely to be very serious. It doesn't mean that BNB does not have serious project, but it's just, the dynamics is demand and supply. There are other chains like Solana, for instance, that are even less centralized, that has been attacked multiple times, but they have a very strong development community, and a lot of people are building on them. And they have, like I always say, they have venture capital funding, and venture capital funding is I call it a self-fulfilling prophecy, because venture capital do not like their projects to fail. So if they were to invest in a project, and the project, or a business, and further down the line the business needs some funding, they won't mind going for another round of investment, just to keep the project running. So for me, I would prefer to spread the bet across Ethereum, BNB, Solana, Optimism, Arbitrum, and AVAX. That's 6 of them. What do I think about Cardano? I think Cardano is too much of a drag. The price action it's almost like it's too academic in its approach. As a result of that, it's not catching on. There's no marketing component to it, so it's not a good trade from a swing trading or from short-term investment point of view. Layer 2 solutions across board, so not only Polygon Matic, all layer 2 solutions are hot, and that's why I mentioned Arbitrum. All layer 2 solutions are natural hot cake, because they are supposed to provide scale up for layer 1 solutions like Ethereum and Bitcoin. So definitely Matic, Arbitrum, Optimism, and the likes are very good. Phantom, I'm not sure about Phantom, to be honest. FTN, I'm not sure about it. I think that, hold on a second. I think that they have something to do with um I think that they have something to do with the FTX guys, but I'm not sure about that. Phantom Foundation. Um Cosmos ecosystem is a very good ecosystem as well. Very, very good ecosystem. The only thing let me not say I'm worried. I'm a bit skeptical about them is they have a lot of freebies, as in tons of unbelievable freebies on that ecosystem. So it's almost making me scared. That I hope there's not going to be problem like FTX. But apart from that, the development on Phantom is also very strong. I mean, on Cosmos, the Cosmos ecosystem is also very strong. I think Phantom is a good. Yes, Cosmos airdrops is crazy. You're right. I mean, they have so much airdrops. Like that's why I'm scared. Like I hope it's not a lure or a trap. But other than that, fantastic. I mean, if you stake on Cosmos ecosystem, you just be getting airdrops from left, right, and center. um, XRP, Algo, QRT, those are first generation tokens. XRP, I don't want to say this on camera, but it's beginning to look more and more like I don't want to say a scam. Um, and the reason I'm saying that, I mean, originally XRP was not a scam. There was a lot of promise to the XRP development roadmap. A lot of promise. In fact, the story then was that the central bank were going to need a settling house, and XRP's technology was going to be the settling house for central banks. That was the original use case being pushed, and that use case made XRP to go like 200 and something thousand% in the 2017-2018 bull run. But you see, when a token has gone that far in its history, it's not likely to go as far again, especially when it's a lot. And the balance of power, let me use that word, meaning the amount of token being held by the XRP Foundation versus what's in circulation is too disproportionate. So I won't be holding any XRP. I don't hold any. I never believed in XRP since 2021. Algo is a good one. Algo has a lot of partnership with I think is it the US? It has a lot of public sector partnership. I can't remember what the partnerships are. Algo is a good one. QRT maybe not. I need to check QRT again. I can't remember. Now that you have tens of thousands of crypto, it becomes very difficult to keep up with them. Okay, I don't know about QRT. QRT. Okay, so this is one BNB token. I've just no, I don't know this one. Let me see. Oh, when this starts? It started in November of last year. I will need to look at. I will need to look at it and check it out. QRT. Uh, because it's still very new. Really, it has an exchange. Yeah, maybe it's trying to become another BNB. Yeah, I'll need to look at it. So, VVS and Tonic are the CRO ecosystem. I've talked a lot about the CRO ecosystem. I believe in the CRO ecosystem. I hold a significant amount of VVS that I've staked for a very long time. If I don't remember it, I don't remember it. Now that you brought it up, I remember that I staked VVS. Um, I think they're going to do very well in the next bull run because CRO will pump. CRO will probably pump like 10x or more. So everything that's on the CRO chain will also pump. Now, CRO is like the younger brother who wants to be like the senior brother of the crypto world, senior brother BNB. So in the development roadmap, they've literally followed almost like for like the same way Binance has gone about developing their blockchain and ecosystem. In the last 1 year, I don't think they've been as profitable as they would have wanted to be, but they're still going. I mean, the app is still being used. They still have some of their sponsorships running, even though I mean not as much as last year because now everybody's in survival mode and everybody's trying to make sure that their costs are low and they have enough capital runway to weather this bear market. But yes, VVS and Tonic are still a good buy. I have them. I don't to be honest, I can't remember where they are, but I think they're still a good one in the CRO ecosystem. But XRP, I'm not sure about XRP. I would rather buy ZEC than XRP. So let me explain what ZEC is. Because ZEC is very little known by most people don't know what ZEC is. And ZEC is one of those blockchains that was created shortly after the Bitcoin blockchain. Let me show you. So Zcash, as it is called, is it's like Bitcoin with a privacy component. So of course, when Bitcoin came, there was a lot of other blockchain that tried to replicate what Bitcoin has done. But the good thing about ZEC is that it uses what you call ZK Snark technology to mask who is transferring funds. So um it's relatively private. It was like a Bitcoin version of Monero. And like I said, it is based on the Bitcoin's code base. It's a copy and paste of the Bitcoin code base. And to show you how strong it's been, I mean, at some point in 2017, it sold for as much as 1,900. In 2018 bull run, It sold for $745. In 2021, it sold for $300 at both peaks of the last bull run. So what this tells me, just going off this analysis at first glance, what this tells me is that ZEC is going to get to around $150 in the next bull run at the minimum. So 35 to 150, that's of 150 or 157, that's like 5x. And it's a very, very stable. If I used to have the wallet at some point, it's a very, very stable, very, very stable network. Um, Bam Bam, you
Um,
want to say something?
yes, I want to ask a question.
Go
So
ahead.
why is it that every bull run the Zcash keeps coming down?
Every
Every bull run, the price keeps coming down.
So
You said it,
I will explain that phenomenon. The reason I think the price is coming down is every bull run, the original holders, people with the largest holding, they sell off their holdings. That's what I think is happening to ZEC. Every bull run, I think they're selling off. So circulating supply is 16 million ZEC. I think it was is designed to also get to what's it called, 21 million. Yes, max supply is 21 million. So it's designed to also get to 21 million, like Bitcoin, but it's a privacy coin. Most people don't know about it because they don't market themselves, just like Monero and the like. They don't market themselves, but you can see that it has really held its ground. I mean, in the midst of all the crashing and everything, it's really far. Let's go the last 3 months or last 1 year. So it's really held its ground. I mean, this is probably one of the lowest. Let me see. Yeah, it looks like this is probably one of the lowest it's been. So I think a lot of crypto or Bitcoin OGs, as we call them, old timers, have a huge SEC, ZEC stash, and they're not selling. They're not selling lightly. They're not selling. Okay, okay. That was when was this? 2023 March. So okay, so it hits its lowest already at 30. See, so that's the lowest all time low is at $30. So that definitely to get to 157 or 150 at the minimum before it comes down. That's if something doesn't happen and maybe somebody talks about it or somebody makes reference to it and then the price just goes crazy. But I like it as a stable store of value because it's essentially like the source code is the same as the Bitcoin source code. It's not as okay, well, it doesn't consume as much as Bitcoin because one, it is not as advanced in the volume of transaction that has gone on the blockchain, and two, there are not so many people that hold ZEC wallets or ZEC nodes. I used to mine it on one of my computers. I can't remember why I stopped, but maybe I need to, I need to give it a large concentration again. Yes, the same thing with Monero is the one I was talking about. XMR. Monero is like ZEC. It's also a privacy. Let me give you Monero. Monero is like ZEC as well. Monero came under a lot of attack, by the way, in recent time by the US government because there was this noise about privacy coin and the use for shady activities and all that. But the real scam or the real culprit is paper currency. Paper currency is involved in the largest volume of illicit activities in the world. So you can see same thing for Monero. Monero has held its price strongly because of that privacy component that it has. So this is Monero. Its lowest was in 2020. Yeah, its lowest was in 2020 in recent time, and it's not come back from there. This was 2017 all-time high, and this was last bull run 2021 all-time high. So I expect that it will tip a lot higher. So there's much noise about Monero as opposed to um, ZEC, but ZEC is completely stable Bitcoin-like network. So yeah, long story short, any crypto you buy now that you want to dispose of in the next 18 months is going to make money. I mean, it goes without saying. Even if we have a crash before the price eventually goes up, it's going to make money because we're at that point where we're just exactly 12 months to the next halving. And what the next halving does is it drops the production rate. Well, it drops the production rate of Bitcoin and increases the costs essentially. So what it means is miners have to pay more in terms of energy costs to mine the same amount of Bitcoin. Basically, they have to pay double. So they have to double the price. And that's why the price of Bitcoin keeps jumping up every 4 years. And I told you about that weird association between when the government starts pumping money and when you get to Bitcoin halving. It looks like it's almost about to happen again. Anyways, I think that's enough for today. We'll see you again, hopefully, by God's grace, next week. Till then, do have a lovely week. And for guys on Instagram, see you again next week as well.
Thank you. Good night.
Good night. Bye.